Hey everyone, good morning. It is 6 a.m., half an hour before the market open on Thursday, August 15th. We were looking for a catalyst for this market, and we didn't think that we would get one. The only potential possibility was an unemployment report that might give us some more insight as to whether the Fed is going to cut rates or not, and a handful of earnings that are coming up today, tomorrow, and into next week. So there's not really a lot to go on, but we'll see. Let's see how the markets are opening up today. Okay, S&P, we can look real fast on this screen, and looks like up kind of significantly. That's a pretty big jump right there for the potential market open. Let's see how our futures are doing. Okay, up fairly significantly. The S&P 500 is up almost 1%. The NASDAQ is up over 1%. That's more like 1.2%. And the Dow is up not quite 1% also, but pretty close actually, 0.9, 0.95%. That is a lot more than I would have expected. That's definitely on the non-random side when we look at things normally, but a lot will depend on the VIX because we have seen 1% and even 2% during that really high volatility period. So before we get too excited about this, we'll take a look at VIX. And VIX is still coming down, still above 15 though. So if we were below 15, then that would be a really, really positive sign. We're pretty close to 15, so it's still a positive sign for the markets, but I'm going to be just a little bit more reserved about it because that VIX hasn't come all that far down yet. So what we want to be careful about is potential algorithms or institutions faking us out here, allowing us to get too enthusiastic and then just coming and selling this market down. Now, that's going to be under normal circumstances, it would be hard to overcome this wide of a gap. But since our volatility is still elevated, it's possible, but we are pretty close to 15. So I would still put that as a somewhat low possibility. What we want to see is that bar completely above the MA50 today, and that looks like it's possible. And we would want to see another one tomorrow. And of course, we want a green bar for confirmation. If this turns out to be a red bar, then we're going to be a little bit more skeptical about the ability for the market to continue to move upwards. But so far, off to a good start. The only somewhat worrisome thing is that it gapped so much, or it looks like it's going to gap so much on the open that the possibility of having a red bar is pretty high. So positive for the market, but we're not going to be super enthusiastic about it just yet. Let's see why that might have happened. Let's see what's happening in bonds first. Bonds, yeah, looks like a gap down to the EMA 8. Yeah, so that's a normal pullback, and you can see that bonds are kind of gappy, or at least the TLT is kind of gappy. So if bonds are coming down, that means we got worse news for the possibility of a rate cut, or we are just unwinding some of the fear. So the reverse flight to quality. So we need to figure out which one it is because those are two very different scenarios. So let's see how we reacted intraday. Oops. Oh, and yesterday in the post-market review, we discovered that Ulta moved up quite a bit. You can see that Ulta is looking like it might gap up all the way up to here to 370. Yesterday in the pre-market review, it looked like 375, but from 329 to 370, that is a significant move. It's a 12%, 12.5% move overnight into a area of resistance, which is that MA50. And the reason for this was that Buffett and Berkshire Hathaway started to buy a whole bunch of shares of Ulta, and people found out yesterday because it was released in the reports, and so this is up huge. So we had a couple of earnings that were related to retail, and Ulta is retail. So if we've got a huge stimulus in Ulta and we got really good earnings in retail, other retail stocks, then that could be a boost in the S&P 500. Could even be a boost in the QQQ because QQQ has consumer discretionary. So let's take a look and see if that's the case. If it is, then I'm going to be a little bit more wary of the move upwards because it could be undone. So a huge gap like this, it could start to unwind towards the and get filled to downside. So let's see what we had earnings before yesterday after market. Cisco. I'm not seeing any big retailers here. Okay, and then so let's say today before market. Walmart did really well. Baba, let's see how Baba did. So Walmart is potentially gapping up this morning as well. Look at how far I had to change the view of my my Zoom in order to catch how far up it went. That's crazy. But that's obviously going to be a huge gap that could fill downwards as well. Baba down, not much though, not much of a gap down. John Deere, but that's not in a related sector. So JD, a TPR, Coach Brands. What's like at JD and Coach Brands? JD also a gap up, not nearly as much as Walmart or Ulta, but still a gap up above a couple of significant resistances. And then what was the other one? TPR. Also a very large gap up. So with all these gap ups in the retail sector, then that is probably contributing to this move upwards. And we just want to make sure that those gaps don't get filled. So there is potential for a pullback today inside the market. Let's see if there is something else. Let's look at the timing of. Okay, so we did get a surge right at 5:30. So there was a report, and the only report that I remember was the unemployment report. So let's just make sure. Jobless claims. Oh, there's also retail sales. Okay. So now we have retail stocks reporting earnings, for the most part did very well. We had a retail stock that got bought up by Buffett and jumped hugely. And so let's see how this retail sales report is. Okay. Month on month, we expected 0%. We actually got 1%. And there's this huge consensus range, but we beat even the high end of that. So this is probably the enthusiasm that we're seeing in the market. So it's probably not related to jobless claims, which means it's not related to inflation, which means that that TLT movement downwards is like, oh my gosh, looks like the economy is doing really well. We don't need this flight to safety. So far, that's what I'm saying. We can confirm it with that jobless claims report, but so far it looks like it's driven by retail. So we did get a catalyst that I completely missed and was not expecting. I had, especially Ulta, no one could have predicted that. That was very, very surprising. And that's a very big a lot of people look to Buffett because Buffett is a value investor and he doesn't go in unless he sees a lot of value. So if he's buying up Ulta, he sees a lot of value in it. People are going to take that as a sign of confidence in the markets or in the economy because it's in the retail sector. So this is up huge. Oops. And let's take a look at that jobless. Initial claims 233, so we're down a little bit, so a little bit of an improvement. But let's look at continuing claims. Thursday the 15th, yes. Initial claims and continuing claims. So the continuing claims are down a little bit as well. Okay, so everything is showing positivity. Now, is this going to last? Is it going to be a lasting effect that allows the S&P 500 to continue to move upwards and make all-time highs? Probably not. It is a good sign. Could we potentially hit that 555 level? Yeah, but also with the gap up, everything gapped up so much, there is a possibility of pulling back. So the question is, do we pull back just to the MA50 or do we pull back below the MA50 over the course of the next few trading sessions? It's probably not going to happen in a single trading session. So we still want to watch this very carefully. We can be cautiously optimistic about the market. And well, at least the S&P 500, the QQQ is still a different story because even it's still below that MA50, even with this gap up over here. And then let's take a quick look at SMH. Even worse, it's basically not really even affected, which makes sense because all of the news is very much centered on retail. So here, SMH is still right at resistance of that MA90. And we'll see. We'll see if it can stay up here because we could easily get tech coming down and retail going up, which is neutral for the most part for QQQ, but perhaps less neutral, a little bit more bullish for the S&P 500. So what will be really interesting actually is to see how the small cap stocks are reacting. So retail, risk on, is that risk on bleeding into other sectors or more especially the small cap stocks? So let's take a look at IWM and a little bit, not a huge amount. And then let's take a look at the ARK stocks. Also a little bit, not and almost insignificantly though, just to the top of yesterday's bar or close to the top of yesterday's bar, still hitting this EMA 20 resistance. So I'd be very, very, very cautiously optimistic right now. It does appear to be good news. Is it enough to send markets upwards? I'm skeptical of that on a longer, like a multi-day basis. I'm a little bit skeptical of that. So we'll just see and enjoy it while it lasts. Let's take a look at our momentum. So that'll be independent of this news that we see this morning. So what we want to do is get a mark of where the momentum picture looks like. And then over the next few days, see if that momentum starts to get more and more positive. And that would tell us how strong of a catalyst all this retail stuff that's going on right now really is. So let's take a quick look at our 90-day highs and lows. $151.32. Might as well take a look at the 52-week. 29.4. And let's look at our 20. $37 and 23. So our momentum is still low, but if we see it building up over the next few sessions, then that'll be a positive sign. And then we'll take a quick look at our momentum over here. And yesterday we saw that, yeah, this hasn't changed. We haven't had a trading session yet. 47.5, 53. We'll just keep it there. We have a good idea of what the other sectors are doing. So we definitely want to watch the retail sector and consumer discretionary today. XLY yesterday, we were just pointing out how terrible it looked, and we'll see if that picture changes. So far, the pre-market is just at resistance. It's trying to move through a whole bunch of resistance right here, but still significantly below that MA50. So we want to see approach and then break above that MA50 over the next few sessions. And let's see, yesterday, there was one. Let's look at our sectors real fast. Financials. Look at that. Okay, so we broke above this area of resistance, very strong with conviction, just not with volume. But look at the pre-market. So something else is happening as well, not just in retail. Looks like it's happening in financials as well. So we'll pay attention to those two sectors because let's see, it looks like XLB. Yeah, not up nearly as much, but it's right into resistance. XLI. Same thing up, but not like financials was up. But although XLI is looking very good, very similar to financials, just not quite as good as financials. XLV is looking very good as well. XLV is looking amazing, actually, clearing highs. So we could be risk on today. XL, but in okay, not let me rephrase that. The S&P 500 could look quite positive today, but XLV, a defensive sector, XLF, that's a little bit more encouraging, but XLI, more of a middle ground. Let's look at XLU. XLU is actually down a little bit. So it looks like we might be shifting a little bit from the more defensive sectors to the middle risk sectors, with the exception of retail, but not all the way to risk on, because we didn't see a huge reaction in IWM, and obviously XLK is not getting a huge boost either, and especially the SMA. Okay? So we're seeing it in kind of the middle of the road and a little bit in the defensive sectors. So that gives me another reason to say, okay, well, yeah, while this is very positive, we do need to see a few days in addition for us to get really excited to the upside, or to really start allocating capital to the upside. So be careful, watch for pullbacks today. And if it stays up here or get a green bar today, then we'll start looking more forward to approaching that 555. If we break through that, then the all-time highs. It's too early to get super enthusiastic about the market, but cautiously optimistic is okay. So that's it for this morning, and that's it for this morning. I'll see you guys in the aftermarket session. However, tomorrow I'm going to be traveling, so most likely I might actually, I won't be able to do either session. Well, I don't do aftermarket sessions on Fridays anyways, so I won't be able to do the pre-market session tomorrow morning. I will do my best to send a note in the channels to kind of update you what was going on, but I won't be able to do the videos. So I'll see you this afternoon, and then wish everyone a great weekend, and then we'll see you next week. So have a wonderful day, and we will see you this afternoon.